Okay, here's the first take on the index now. Not bad actually, 60 points higher on the Nifty.
Quietish session for our markets.
Quietish session with a hint of green.
A good-looking screen. The Nifty is up 51 points. But that's what's really doing well today is the mid-cap index. That one is outperforming in-house.
Let's just quickly run you through a couple of levels more than anything else, because that's what's come down to. Look at that. I mean, 8 points is what we have.
Well, coming to the close of what's been a quiet trading session, but a bit of a pickup towards the end. 19,350 on the Nifty, a gain of about 0.25% on the Nifty. Sensex higher by 0.2%.
Hello and welcome to Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy, and these are all the top headlines for the day. The Sensex and the Nifty end marginally in the green after a range-bound session. Mid-caps outperform the blue chips even as the Nifty Bank Index ends flat. Gokaldas Exports grabs control of global apparel player Atrico Group for $55 million. The acquisition will bring in a bunch of new clients and enable duty-free access to the large US and European markets. The stock hits its 20% upper circuit. Escorts surges on news that it may be exploring the sale of its 850 crore rupee railway business. Sources say the company is in talks with prospective investors. That's a CNBC-TV18 exclusive. APL Apollo Tubes falls over 2% on big block deal. Trades worth over 600 crores. PG Electroplast fires up on launching a 500 crore QIP. Bharat Forge ends at record highs on fresh order wins. The stock is up 15% this month. Agrochemical players like India Pesticides, Make Money Organics and Lakshmi Organics jump on a positive brokerage report. Price increases in China provides relief to soda ash players. Tata Chemicals and Gujarat Heavy Chemicals gain. Well, here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Pramod Amte, the head of Institutional Equity Research at InCred Capital. In Big Corporate Voices, we have Sivaramakrishnan Ganapati, the Vice Chairman and Managing Director at Gokaldas Exports. Well, first up, let's get you all the market action of the day. It was pretty much a rain-bound session on the Lal Street, which ended mildly higher. The Nifty and the Sensex ended close to 0.25% in the green. The Nifty managed to hold on to the 19,300 mark, while banks underperformed the blue chips, while mid-caps continue to fare better. Prashant joins in with the market wrap. Prashant.
Well, it was a positive day, no doubt about it. But like yesterday, it was a bit indecisive because, yesterday the open and close were same. Today, the Nifty and both the Bank Nifty could not cross yesterday's high. The Bank Nifty, which had been the stronger of the two indices over the last 2 days, actually ended, marginally higher. So it was actually weaker by close than what the Nifty was able to do. Mid caps and small caps, no such problems. As you can see, small cap index up over 0.5%. The mid cap index up about around 0.5% as well. Before I come to the broader market, which is where bulk of the action was, large caps, UPL did well. Actually, agrochem players and, of course, pure chemical stocks did well. Hindalco, Adani Ports were some of the other names which participated in the upside. Broader markets, right? Gokaldas Exports was the big gainer. 20% limit up for the day. The management joined us on the back of that acquisition, first and exclusive, right in the morning. The street liked what it heard from Gokaldas, and the stock was up on very large volumes. BEML was a late mover, but once it moved pretty big. Finolex Pipe, Chennai Petro, Weber Global has been doing well all of last week. There was Nazara Tech, NRB Bearings, some of the other names. Chemical stocks, and this is a space which has been completely bombed out, but today there was action. Deepak Nitrite, Tirumalai Chemicals, Sumitomo Chemicals, these amine makers, Alkyl, Balaji, they also have been doing poorly, but they participated in the upside. Soda ash prices are up. A pure play company there is GHCL, and that did quite well today. Losses coming through in names like Union Bank, Piramal Enterprises had an investor day yesterday. Stock pulled back. Titagarh, JP Associates has gone up 20% over last Friday and yesterday. That pulled back. JBM Auto and something like a Stylem Industries also lower. The indices are a bit ranged and has been so for the last couple of days. US markets, US indices have moved on. Seems like they've moved on after Jackson Hole. The Nasdaq is up about 2% or so since. We will once again watch what the dollar index does, where yields settle at, and of course where the S&P and the Nasdaq are when we come back tomorrow morning. Back to you.
All right, thanks a lot, Prashant, for that. Well, in Market Opinion, Pramod Amte, the head of Institutional Equity Research at InCred Capital, continues to remain positive on the infrastructure sector. He also lays out his top picks.
In terms of investment themes, we continue to remain positive on infra and the home building as a sectors. I think the industrial division is working positively, where basically the order book which was there is also turning into the last quarter, if you look at turning into the sales momentum. We are looking top down, if you look at starting from cement, as I said, is Ultratech. Then we recently, in the high conviction, we moved up KAI industry. However, I think the run up in Kajaria, we have tried to move it out of the basket. So KAI is where we have recently introduced in our high conviction idea. We also had Polycab, which I think has run up substantial. Again, we have moved it out for the... So the run up in the mid caps are much sharper to catch up with the analyst estimates.
All right, on to the second headline now. Gokaldas Exports was locked in an upper circuit of 20% after it announced the acquisition of apparel manufacturer Agrochemical Group for $55 million. This acquisition is expected to close in the third quarter of this fiscal. Surbi joins in with more details on that. Surbi, take us through the deal contours.
Thanks so much for that. So as you said, it has entered into an agreement to acquire Agrochemical Group for $55 million. Now, this is going to be funded by a mix of debt and internal accruals. Management has said that they will be taking a debt of $40 million and the rest will be internal accruals. They have a cash balance of around 400 crores as of June 30th, and the transaction is expected to be completed in Q3 of this fiscal itself. Now, Agrochemical, as you said, is a leading apparel manufacturing company. It has a wide range of products, but about 80% of its product portfolio comes from the bottom wear. Now, it is headquartered in UAE, but it has manufacturing facilities in Kenya and Ethiopia with a capacity of 40 million garments annually. With this, automatically Gokaldas doubles its manufacturing capacity, because currently it has 36 million garments of capacity annually. Revenues for this company is a little over $100 million. They operate at a 10.5% EBITDA margin and a PAT of $7.2 million. So from valuation perspective, it is valued very attractively at a little under 8 times PE. Now, what will Gokaldas get from this acquisition? It will get duty-free access to key markets, especially like North America. They will get a complementary customer base. So the management did allude to us that, you know, they have only one customer in common and they will have a lot of cross-selling opportunities. They have well-run manufacturing facilities. The acquired company is running at 85 to 90% utilization levels, and also with this acquisition they will have the potential to double their revenues in the medium term. We spoke to the management earlier, so let's listen in to their growth plans.
The EBITDA margin is about 10.5% at the moment for the company. And we believe that, after we take control of the company, post all the regulatory approvals, we will have an opportunity to work on improving the EBITDA margin over the next 2 to 3 years. We will also be investing in the plant and machinery, modernization, etc. So all of that will happen as we move forward. In my opinion, this particular asset itself, we should be able to grow by about 25-30% in the next 2 to 3 years. That's the intent with which we are coming. The company only has a working capital debt of about $15 million at Agrochemical itself, and we will be funding it by part equity, part debt. The debt that we will take to fund this acquisition would be about $40 million. This would be at about 88%, 89% thereabouts. This one will also add more of North America to our geographical reach. This asset exports 95% of its output to USA. So that's because it gets duty-free access to that region. So our weightage to that region will only continue. Probably it will increase up a notch.
Okay, well, the third headline today, Anna, CNBC-TV18 exclusive, Kubota is considering the sale of its 850 crore railway business. Now, we do understand, sources tell CNBC-TV18 that Escorts Kubota is looking to sell its railway business, and there is a lot of interest that they're getting from investors. In fact, they are in talks with investors as well. Now, the railway sector is doing very well. A lot of the players, whether it's Texmaco Rail or Titagar Wagons, have seen their market cap grow substantially in the last many months, and hence there's high investor interest in this business. Now, Escorts Kubota's partner, which is Kubota, has no real interest in the railway business. It is kind of a non-core business for them, and hence they are looking to, sell that business over the near to medium term. Now, if you look at the business, the railway business of Escorts Kubota has been growing very well. It's tripled in the last 3 years. It's 10% of the company's overall revenues now, but the revenues has seen a growth of around 35%. So it's a good business that the company has sort of built over the last many years. But now they're looking to sell it off because they want to focus on the core business, which is the farm equipment sector, as well as the manufacturing of tractors. We reached out to the management of Escorts and they said that they are exploring opportunities with several investors, but the stake sale in the railway business, that news flow is absolutely speculative at this point in time. But let's shift focus to the banking space now. Banks have reported the best asset quality in the last 10 to 15 years in the first quarter of this fiscal. However, the net interest margins remained under pressure for most banking names and is expected to remain the same in the coming quarter. Abhishek Kothari is here with the wrap on the first quarter performance from the banking space. Abhishek, tell us more.
Well, let's take a look at the Q1 FY24 report card of the banking sector. Sectoral quarterly profit after tax was the highest ever, coming in at 74,677 crore, up about 69% YOY and about 18.5% quarter-on-quarter. Profit growth on a quarter-on-quarter basis was strong for banks like Axis Bank, Yes Bank, Suryodaya Bank, Union Bank of India, etc. While there was a decline on sequential profit seen for Punjab and Sindh Bank, Central Bank, CSB Bank, Bank of Baroda, etc. Net interest margin has come under pressure for most of the banks in Q1 FY24, and this may continue in Q2 as well. So while a few banks have been able to withstand the decline in net interest margin like HDFC Bank, Canara Bank, Union Bank of India, others have seen a decline in net interest margin anywhere between 8 basis point to as high as 62 basis point. Operating profit growth of PSU banks was better than that of private banks. Operating profits for the sector increased by 43.7% YOY and about 0.1% sequentially. Asset quality for the banking sector is the best in last 10-15 years. Gross NPA ratio of the sector declined to 3.8% when compared to 5.9% YOY and about 4% sequentially. Net NPA ratio of the sector declined to about 0.9% when compared to 1.6% YOY and about 0.96% quarter-on-quarter. Core provision coverage ratio continued to improve. It now stands at 76.5% when compared to 73.2% YOY and about 76.2% quarter-on-quarter. In terms of outlook, the deposit growth will continue to come in at a cost for the banking sector in Q2 FY24 like it did in Q1 FY24. This could put pressure on the cost of funds as well and the net interest margin. Small finance banks are witnessing strong momentum with respect to their earnings, which can continue going ahead as well. Treasury gains will not be there in Q2 FY24 for many banks. Banks won't mind shaving off a couple of basis points from their ROA, that is return on asset, if credit profile of the balance sheet is healthy. Return ratios hence can remain on the healthier side for the banking sector.
Okay, thanks a lot, Abhishek, for that. Let's slip into a short break. We'll be back with all the other headlines that we've been tracking today. Stay tuned. Welcome back. You're watching Markets Today on CNBC-TV18. The fourth headline today, APL Apollo Tubes tumbled over 2.5% after 38 lakh shares worth 624 crore rupees changed hands on the exchanges. The number of shares exchanged amounts to 1.5% of the company's total equity. Nigel joins in with the details. Nigel, over to you.
Well, that's right. APL Apollo Tubes ended lower in today's trading session, owing to source-based information which indicated that the large trade that took place as the markets opened was that of the promoter entity. The promoter is likely to have sold a little around 1% odd stake in the company. And the price at which this stake was sold was at a discount in comparison to yesterday's close price. The total value of the deal will be roughly around 420 crores. And as of the last recorded filing, well, the promoter entity held roughly around 30.6% stake in the company. So post this deal, it'll come in a little below that 30% odd mark. We're waiting clarity to understand why did the promoter entity sell and what are they going to do with this 400 crores odd.
All right, thanks for that. Well, PG Electroplast surged over 9% after launching a 500 crore rupee QIP. Sources have told CNBC-TV18 that the proceeds will be utilized for capital expenditure. Vivek is here with more details. Vivek, over to you.
PG Electroplast was one of the top movers in the session today. Remember, to the exchanges yesterday, the company said that they had launched a QIP to raise up to 500 crores, and the floor price for this particular QIP, according to the SEBI formula, was close to 1,641 rupees a share. We had access to the term sheet where we understand the proceeds of the QIP would be utilized by the company for funding working capital requirements of its subsidiary known as PG Technoplast Private Limited. Proceeds were also going to be utilized for the capex spends of both the company as well as its subsidiary. Now, the indicative issue price, as per the term sheet, came close to 1,560 rupees a share, a significant discount of close to 13% to yesterday's closing price. The implied dilution thereby coming to close to 14% of the existing share capital. Despite that, the stock did very well in the session today, amongst the top movers. So PG Electroplast will be interesting to see, how exactly is the QIP totally subscribed and how are the proceeds finally utilized for.
Well, on to some important news now. With an effort to protect investors from getting wrong financial advice from unregistered entities, SEBI is now proposing a new mechanism where all fees paid by investors to financial advisors will be processed through a designated platform monitored by a SEBI-recognized body. Yash Jain is here with the details. Yash, over to you.
Well, Sonia, this is a very interesting consultation paper which market regulator SEBI has released, essentially on how payment should be done to, let's say, research analysts or investment advisors. Both these entities, research analysts and investment advisors, charge fees to their clients either, for the research that they provide or the investment advice that they provide. Of course, there have been many instances where, unregistered entities sort of charge this kind of fees to their clients, which SEBI wants to curb. And in a move towards that, what market regulator SEBI has said is that they will establish a platform. This platform will be monitored, supervised by market regulator SEBI appointed body. Now, all these research advisors and investment advisors will be listed on that particular platform. These research advisors and investment analysts will have to put their bank account details on the same platform. So whenever any research or investment advice is taken by a client, the payment to those respective RAs or IAs will be done through this particular designated platform. Now, this particular proposal aims to achieve three most important things. One is help investors ensure that payments reach to only these registered investment advisors and research analysts. Second one, it establishes traceability of these funds or the payments which have been made. And finally, it sort of identifies, isolates and avoids unregistered investment advisors and research analysts.
Okay, thanks a lot for that. Very important over there. Thanks, Yash, for joining in. The fifth headline today, Bharat Forge closed at record highs. The company's defense arm has won an order worth 288 crore rupees. Remember, this is a slew of orders that the company has won in the past 6 months, and hence the stock is sitting at a fresh 52-week high, as well as it's gained over 30% in the last 6 months. Now, this fresh order has come in from the Defence Ministry to supply missile systems. It's an order of almost 300 odd crores and will be executed over the next 12 months. But apart from that as well, the company in the recent past has won orders to the tune of 850 crores from the defence space. So this is a space that is growing very fast. A lot of brokerages are bullish on the stock. In fact, Nomura has a buy on the stock. The target price is well above the current market price as well. They say the defence continues to grow with more orders. That is the defence arm of Bharat Forge. And even on the valuation parameter, things are not looking that expensive despite the rise that we've seen in the stock price. The stock is currently trading at 15 times EV to EBITDA forward multiple, which is not too bad given the kind of EPS growth that the company is witnessing. But in more brokerage outlook, agrochemical players like India Pesticides, Meghmani Organics and Lakshmi Organics recorded healthy gains. This after Antique Broking expects a bounce back in the sector in the current quarter. Sonal is here with details. Sonal.
Thank you so much for that. Well, agrochemical sector, the entire sector is in focus. There are two notes, one on the sector and the second on UPL. Let me start with the first one, which is by Antique on the sector, where they talk about channel checks suggesting that domestic industry has witnessed double-digit YY growth. This is from April to the month of August. Now, remember, quarter one was really weak across the agrochemical space because of inventory destocking. As monsoon activity has picked up in July, it has more than offset the lull that was seen in June itself. But for export-oriented players, the slowdown is expected to continue in the near term. So recovery is only seen in the domestic markets right now, but prices in both domestic and export markets, they have settled down and are showing signs of some upside as well and revival. Antique believes the worst is largely over for domestic players, so that's a big statement. They expect a bounce back in performance from second quarter itself. However, the revival for export players might take some time, but for the Indian players like Dhanuka Agritech, they have a bigger exposure here. For all of them, it would be a good news. HSBC has a buy rating on UPL with a target at 775 rupees a share. They think that there will be possible recovery in quarter three, given visible signs of reducing inventories and stabilizing prices as well. Latin America, it's a big big market for them. That will be a potential catalyst. Stress tests suggest balance sheet remains protected despite the headwinds that they have been seeing. Global crop protection business is undervalued according to them, so they see more upside from here on. And downside risk from here will be the weather issues, volatility in raw material prices, and it will also include any unfavorable acquisitions that the company makes. So that is on HSBC's radar as well.
Okay, so I'll stay on. The prices of soda ash are also rising in China. Prices have increased by 6.6% in the last week. This is providing relief to players back home. Tata Chemicals and Gujarat Heavy Chemicals have gained in trade today. Sonal is with us to give us more details on that. Sonal, over to you.
Well, that was the agrochemical space. Now in the chemical space, that is soda ash prices, they have seen a revision on the upside in Chinese markets, and that's why these two stocks are in focus. Now, China soda ash prices are up 6.5% on a week-on-week basis. They have come at $277 per metric ton. China soda ash prices, however, they are down 51% from the peak itself. Now, these two are the biggest producers of soda ash, and in last couple of months, we've seen a big cut in domestic soda ash prices as well. Now, in Q1 call, Tata Chemicals had indicated that there's net supply of soda ash from China which has increased, and that is something which has led to lower prices this time. And oversupply in the soda ash market is something which was expected, but that came in earlier than what was expected. Domestic supply was also impacted because of higher imports coming in from China itself. So they wanted to check how demand is panning out in China, because that is what they said would impact the global soda ash markets. The real estate sector has been under pressure, and that's where the soda ash demand was declining from. But now looks like, since they have taken a price rise, it would mean that yes, the supply maybe is ebbing or the demand is coming on the higher side. So this would be a positive read for domestic soda ash players as well, the likes of Tata Chemicals and GHCL. Tata Chemicals has around 20 to 30% EBITDA coming in from India business. So that is a good news for the stock as well.
Okay, thanks a lot, Sonal, for that. Well, in more corporate news, British American Tobacco, which owned nearly 1/3 of ITC, has seen its shareholding decline to just over 29%. Employee stock options issued by ITC over the years, including 10 crore shares issued in FY23, has led to this dilution in British American Tobacco's shareholding. CNBC TV18's Yusuf has put this data together, and Shilpa Ranipeta is joining us now to present that data. Shilpa, over to you.
Well, in 15 years, the British American Tobacco's holding in ITC has fallen by 2.96%. That's from about 32% in 2008 to about 29.04% as of June 2023. And as you pointed out, the reason for this is ITC's employee stock options issued by the company over the years. In fact, in its annual report, BAT said that the reduction in its share in ITC due to the ESOPs issued resulted in a loss of nearly £3 million. So each time ITC issues fresh shares under the ESOP scheme, the total equity base increases, right? And that has been diluting BAT's shareholding in the company. And this has been over the years. Now, most recent was the 10.5 crore shares that were allotted under the scheme in the last fiscal, which increased the equity base to about over 1,200 crore shares. And these were granted to some of the top executives of the company, which included the chairman Sanjeev Puri, ED Nakul Anand, the CFO Supratim Datta, among others. Now, why this data that was put together by my colleague Yusuf is interesting is because BAT is very interested in staying invested in the company. And the company's CEO, BAT's CEO, has said that he wants to keep BAT's stake at least at 25% in ITC. And why? Because that ensures that the company keeps its board seat and it has the power to steer the company towards more opportunities, especially the ones that BAT sees in India in the nicotine segment. More importantly, the holding of at least 25% also gives the company the power to veto resolutions in ITC. For instance, BAT had actually used its veto rights in ITC back in the day to actually, turn down ITC's ESOP proposal, and this was exactly on the grounds of stake dilution. Back to you.
Okay, thanks a lot, Shilpa, for that. With that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.